AMC stock continues to get beaten down today along with the broad markets, and you can really summarize what is happening today by the Fed starting to talk tough on inflation after the jobs report that we got last week, guys. So let's get into everything you need to know revolving the data around AMC as well as the broad markets. We're going to keep it straight to the point, not waste your guys' time. So let's get into it. Hit that like button and subscribe to the channel. Thank you guys for doing that. So AMC specifically, guys, I've stressed to you guys over and over and over and over again, literally like a broken record, that the market environment is important. For an example, a day like today where the S&P is down 1%, NASDAQ down about 1.5%, it's going to be pretty hard for AMC to be bullish with a bad market environment. Now, it's not impossible, but especially coming off of the reaction from Bed Bath & Beyond going up 100% and then dropping 50% because they're going to raise 3 times the value of the company in cash, well, it's putting a bad taste in people's mouths, right? Not that it has anything to do with AMC. It was that knee-jerk reaction that caused a lot of bearish sentiment really out of nowhere for AMC, for GameStop, for even Lucid and some other EV players. So that's really what has been fueling some of the negative sentiment in AMC as of recently. I don't think this rally is over. We've seen 2 bad days. Yesterday down about 9%, today down about 7.5%. But the markets have also been pretty negative over the last 2 days. And what you're seeing today, and what is really fueling a lot of this downside pressure, is obviously Fed Jerome Powell's speech yesterday. He said that if labor reports continue to be this hot, they're going to have to raise rates more than what the markets expect. So that's signaling a higher terminal rate. And then you get Fed Governor Christopher Waller warns that interest rates could go higher than expectations. And he says, quote, We are seeing that effort begin to pay off, but we have further to go. Waller, where is it? No, he said, speaking to an agribusiness conference in Arkansas, Waller said the January jobs report showing non-farm payroll growth of 517,000 indicated that the employment market is robust and could fuel consumer spending that would maintain upward pressure on inflation. The markets have been looking at this inflation situation and the Fed raising rates as, hey, if inflation continues to come down, maybe the Fed will be okay with a tight labor market. But what you're starting to get now is the Fed basically telling you we have to go into a recession, or we have to see a lot of softening in the labor market at the very least to get them to stop raising rates. So it's kind of saying we're close to a soft landing. We're actually making progress towards that, but then the Fed is trying to set that back. They're trying to cause that economic instability. So markets clearly are not going to like that. You also see that Alphabet shares fall 7% following Google's AI event, and that's for its own reasons, but Google is like 5% of the NASDAQ, over 3% of the S&P, so it does have a pretty high market weighting in the broad indexes, guys. So none of this is helping to make people bullish on AMC or give them a reason to buy the stock. Now, I think heading into earnings will be very, very important. And I think after earnings, there's probably going to be a pretty bullish reaction based off of company guidance and what the numbers actually look like, especially fueled by Avatar in Q4. So I'm still very bullish and excited for the earnings event. But as of right now, if we take a look on Ortex, we're still on the threshold securities list. The live short interest of free float sitting at about 22.5%, 115.5 million shares that are sold short. About 336,000 shares, it does look like, were sold short here today. Cost to borrow average of 312%. Cost to borrow max at 374%. Cost to borrow minimum at 1%. If we take a look at Interactive Brokers short availability, that is sitting at 0 shares. 0 shares available with a 175% cost to borrow rate. So numbers moving around a little bit here. But the short interest not really changing, and the cost to borrow rates not changing all too much. We're down from that high at about 1,000% cost to borrow max, but you're sitting comfortably around 300%. Interactive Brokers still has us at 175. That is very high, and that does put a lot of pressure on the hedge funds. Now, if we look at the interesting flow sentiment, 46 orders totaling $11.5 million. Positive order value of 8%. So there you have that. As far as economic data coming tomorrow, let's see. You have building permits preliminary for January, PPI month over month for January. Oh, this is actually the wrong week. Yikes. Okay, this is the right week. Let's go to Thursday. You have initial jobless claims coming out tomorrow at 9:30 in the morning, continuing jobless claims, and some bond auctions. Those initial jobless claims, considering the labor market data is so important to the Fed apparently, well, that could move the markets big. You also have the Michigan Consumer Sentiment Survey coming out on Friday, and it's going to be important what the inflation expectations look like, and that's going to be the biggest driver, I think, to move the markets throughout the rest of this week. Now, in after hours today, as far as earnings, you have Walt Disney, Affirm, Digital Turbine, Robinhood, MGM Resorts, Anali, O'Reilly, Goodyear, and 2 other companies that I've never even heard about. Tomorrow, pre-market, Pepsi, AbbVie, Canopy Growth, Kellogg's, Duke Energy, Toyota. Thursday, after hours, PayPal, Cloudflare, Lyft, Expedia, Aura, Bloom Energy, and that's basically it. And then you do have Honda on Friday, but that's all, guys. We're really through the biggest part of earnings season. You're going to start to get a lot of mid to small cap companies that do report next week, but they're really not going to be market movers. So I think the risk of earnings is out of the way, and that was something that potentially could have caused some bearishness with AMC. That did not happen. It looks like this time around it's all about the Fed. Now, the failure to deliver tomorrow, you are going to see 1.4 million shares that have to be bought by the market makers, by hedge funds, so on and so forth. And then you're going to get 2 million shares that need to be bought coming on Friday. So there is still a lot of FTDs that do need to be covered. Specifically, 2 million on Friday is pretty decent, and that's quite a bit compared to the volume that we see on any given day. It's around 10%. We've only seen 23 million shares trade hands so far on the day, so it is a lower than average volume day. I will tell you guys that one. Now, as far as technicals, you want to hold up at the 50-day moving average. That's really the only thing that I am looking at right now. Do we break the 100-day on the upside? That would be at $6.20, or do we come down, retest, and break under the 50-day moving average at $5.51 per share? You're closer to the 50-day moving average, but I do still think there's a decent amount of bullishness left in the markets for AMC, guys. So that's pretty much going to be it for this video. We did cover a lot, not too much else to actually say, nothing specific that is actually coming out today on AMC. If anything, you got that good news yesterday that AMC is going to be charging more for better seats at their theaters. So I think that was big, and I think it was really underrated by the marketplace. So that is it. Thank you guys for watching. Hit that like button and subscribe to the channel if you have not already. Most importantly, enjoy the rest of your day, and I will see you in the next one.